All right, everybody. Let's go ahead and get this started. Today we have Nick Chahine, lead trader from the Options Inner Circle chat room, and we're going to be discussing trade ideas, options education, setups, technicals, fundamentals. We're going to be talking about current market events, option trades, iron condors, butterflies, spreads, all that sort of stuff today. We're going to go all in hard with Nick. So shout out here, Alexandria, Bang, Azif, Brian's in the house, like 10 gyms, Julia, Matthew, Ted. We got a packed house here, a lot of members here. Just for everybody to know, Nick was in the live session. He does this Monday to Friday, 9 to 5. So he just got off there. Basically, he does not stop working. So let's go ahead and bring on Nick Chahine from the Options Inner Circle chat room.
There I am.
Yo, what's up, Nick?
My blood pressure. That's what's up. Whoa, what a day. Good and bad and good and bad and good and bad. So the price action is crazy. All the experts are no longer experts. Everybody's tearing their hair out. And basically, thank God for options and selling options is paying the bills, basically. It is a tricky market. So if you feel a little confused, don't feel bad about it. You're not alone. If you read the experts' comments out there, those who had super strong convictions, now they are humble, saying, oh, if this, then that. So basically, there's a lot of uncertainty, and for good reason. So the day was good. It was profitable with the action as far as trading. We nailed it. There's somebody on Twitter trolling me, not trolling me, copying me. I guess I'm famous now. There's an account. If anybody reaches out to you, it's not me. I'm not reaching out to anyone.
Yeah. Nick will not give you a WhatsApp number to send PayPal him
Yeah,
cash.
okay. But, you've done that before.
so folks, everybody that's here in the chat, if this is your first time here, if this is the first time that you're in one of these sessions, put a 1 in the chat. If you've been here before, put a 2 so that we can get a sense of how we can take this conversation today. All right. A lot of 1s.
We have a few 2s.
Let's give them a little bit of time. There's like hundreds of people here, so I'm seeing
that's pretty good.
So, yeah,
we have 1s and 2s, a lot of 1s, a lot of 2s.
Use the chat, folks. Yeah, use the chat.
If you're a 2 and you got reached out by somebody on Twitter that looks and sounds like me on paper, that's not me.
It's your cousin. It's your twin.
It's not twin. A scammer. He's blocked me, so I don't see his account. And he's 1 letter off, and he's using my picture, my old picture. So I'm going to update my picture to differentiate the two.
So what do you say, Nick? I see a lot of 1s. I see a ton of 1s. So
yeah,
welcome.
We're gonna have a good time. We're gonna have a good time. So
yeah. So Nick, before we do get into all the stuff here, because we're gonna cover a lot of education, a lot of trade ideas. We're gonna show you how Nick, as a professional options trader, and his team, right, at the Options Inner Circle chat room, navigate these markets. But for those that, there's a ton of 1s here. All right, we get it, guys. There's a bunch of 1s. All right. But Nick, for those that are just watching here for the first time, right, a quick introduction here of Mr. Nick Chahine.
Sure. Yeah. So I'm an engineer with a degree in finance, an MBA in finance. And I've been in the corporate world before, so I don't come from Wall Street. And then I figured this stuff out decades ago, throughout the last decade or so. But I've been trading forever, ever since I was in my early 20s. So that's like 5-6 years ago. No, more like twice and then some. So anyway, I don't speak the Wall Street lingo, although I know what it means. I prefer to just explain it in plain, simple English. If you don't mind, I can steal the screen away from you. Yes, that's a yes. I'll take it.
Yeah, let's go ahead and get this ripping.
Yeah, I figured that much. Okay, so this one, share. Okay, perfect. You got that. So the idea is to not get bogged down by what Wall Street wants us to believe. Believe it or not. I'm asking you to believe this. Believe this. It's a rigged game to a degree. Maybe rigged is too harsh. It is well organized. How about that? It's a well organized. So If it's well organized, then we can learn the rules so we can play by the rules. And I'm going to show you just a couple of things. For example, if you don't believe in the technicals, if you don't believe in the charts, and if a technical analyst tells you something, not every technical analyst know what they're talking about. I don't even call myself a technical analyst, but I'm pretty darn good with the charts. Today was proof positive. And let me show you just a couple of things to just get this out of the way. If you don't know how the technical, why it's important to pay attention to technicals, because in this market, there are no experts. These circumstances have not happened in ever. This set of circumstances on Wall Street. So recession now, not recession. There's no recession. What we have now is something new. First of all, there's a difference between the recession on Wall Street in stocks, which we're already in by a lot, and there's a recession in economic terms, like GDP and such. They're two different things. And a recession in the economy doesn't mean a stock market crash. So separate what you hear on CNBC. Better yet, here's what you do with CNBC. Turn it off. If you need news, go to news aggregators like Benzinga and get the headlines. Don't read the opinions in there. Educate yourself on the matter. The opinions are not there to help you out. They're there to engage your emotions so you can watch. For example, you're watching a show, they'll say, we have so-and-so coming up next, and you won't believe what they have to say about bonds. And you're tuned to the TV waiting for them to come back, and they come back and they say something about bonds, and you go, that's it? Okay, so let's pull up a couple of points on this chart you're looking at. Listen, there's nothing on this chart, right? I'm going to mark it up by hand. This is the S&P, the SPY, that's the ETF, and it's a daily chart, so there's no tricks. I just want to pull out one thing. So this is significant, right? Big bounce. Look how well it plays out here. Look at this candle. Look at the middle of this candle. Middle of this candle. Look, a little cluster here. And look at where they decide to die. There are no coincidences. There are no coincidences. This point, okay, that's that point here, which is this point here. There are no coincidences. That's how it works. These are self-fulfilling prophecies. Don't fight it. Use it. It's a huge tool. So having said that, I'm going to start with the bad news. This is the June correction. It was very, 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 very harsh. What happened here? Nothing. This was caused by Powell's words. There was no deterioration in Amazon earnings or Google's earnings or Apple's earnings. No. Powell, he said, can we cuss? No. I'm going to mess up the world. I'm going to crush the economy because I can't control supply. You know, we have a shortage of everything. That's why we have inflation. Everybody wants to buy the same thing. People pay up for it, inflation. So what does he do? He wants to destroy demand. How? By causing people pain to not have jobs. So he needs to destroy jobs, which is his job to create jobs. But anyway, so I'm going to make it simple. This week, if we lose this June low, hunker down. Technically, we won't even hold 300. We'll go to 254, 255, technically. With a lot of supports in between, not a straight shot, but that's the bad news. We are fighting for our life right here with the S&P. If we lose the low, which we almost lost today, of the June low, we are going for a fun ride, way, way, way lower. It does have supports along the way, but be ready for debacles. The supports are, I'm going to go to a weekly. So we're talking big picture, and then we'll talk fun. That's the low I don't want to lose. That's an inverse cup and handle. The downside target is this many points, 1,100 points SPX, so 110 points SPY. Yes, 110 points. What? This guy's an idiot. No, I'm just telling you what those are. This is the problem. That's where it all started. What do you mean? The perfect world, this was a huge rally, all-time high. Remember that? Before COVID? COVID hit, we recovered way too fast. Then the fall of 2020, we built this base. And this stupid rally came. This is the payment. from the stupid rally. And look what's going to save us. If we lose this, I think we stop the debacle from going 110 points inside this box here somewhere. 320, 318, I like that. So that's the bad news. First things first. First things first. Hold this. Bounce. And what are you going to do if they bounce? What do you do if they bounce? I'm quizzing you here. I'm giving you trade instructions. If you get a bounce like this, are you going to buy calls here? Are you going to get long? No. Yeah, looking to close your longs. Expect a fade. Okay. And if it holds again, they'll bounce it again. And then if we lose this, or we come back and make a better high, and then we start building an ascending trend. Exit your longs. Don't buy calls. Exit your longs. You know what I mean? Yeah. Don't buy. Don't chase too late is what I'm saying. I'm an optimistic guy. I'm looking up. I'm still buying long-term entries into stocks that have fallen into way, way too deep. For example, CRM, Amazon to a degree. There are a lot of stocks that are in the toilet. Facebook. Oh my God, Meta, is it cheap? Can get cheaper because of the SPX, but on its own. Okay, so this is the bad news. The whole market is teetering on sentiment, feelings. People are panicked. Yesterday, there's a guy I haven't heard from in months. Reaches out to me, texted me one. Have you seen this? And he's quoting 1925 and 1940 charts. Look at this video, and I didn't answer. 10 seconds later, have you seen this? He enumerated risks from jobs, mortgage rates, Iran doing something, Ukraine, Russia doing something, and there was something else in the world. Little right, maybe Germany. Was there news out of Germany? Something. I was like, wait, there's like panic, text after text, panic. The world's coming to an end. So there's that sentiment, and it's powerful for now, but it doesn't change the P&L of Amazon. Here's what I say. If the S&P is down here, that means the P&L of Amazon has to be like demolished. It has to be like cut 30%. Like, how can Amazon lose 30% of sales in the next couple of months? I don't think it's feasible. But if it is feasible, yeah, then I support the SPX coming down, but I would be buying that dip. So leave dry powder. It's okay for stock markets to fall. It's not okay to panic. So let's avoid the mistakes. So what did we do today? Today was fun. We traded it pretty lively. We had a whole bunch of lines, and we made money trying to trade the action short term. So during the day, I share my screen like you're looking at now. So now we're getting to how I spend my days with you or with the members. So been working with Benzinga since 2011, I believe. And the most recent addition was the live room. I came up with the live room thinking, oh, I'll test it out. And before you know it, now I spend 9 hours a day, 9.5 hours a day in the live room. So I, dedicate my days every day to helping you guys and girls during the day make money. And they were profitable. How? At the open, I shared an iron condor. If you don't know what that is, this is a self-hedged trade that says, I don't know exactly where the stock market is going today, but I know it's not going here, and I know it's not going here. Those are two like fictitious boxes. So I collect credits here and I collect credits there. And if price stays in between, I win. Today, the low end of the area, the range I said was tested, but it survived. It was 30, what were they? 36.30, wherever the S&P was. Yeah, 36.30. We closed 17 points above that. So it was touch and go into the end if somebody held on to it. So this trade doesn't need anything to happen. All it needs is that the S&P stay in between the whole day range. That's it. That's easy enough to do. Now, other trades would be to try to catch this breakout. That was a fake out. To try to catch this breakout. That was a fake out. To try to buy dips. And these were buyable dips into prior support. To catch this breakout, that played out super well. To catch this breakout, you can see it here, the little white arrow like this with an arrow. They over-delivered. And this one, they over-delivered. And then this one, they delivered kind of, they stopped short of my target. And then late in the day, one guy in the room, his name is James, he trades fast. He said, "Ooh, I see calls opportunity." And he jumped in on cheap calls late in the day. Other people followed him and they made 60% or something like that on their rallies. It wasn't my idea because I started saying, speak up, give me your ideas, let's trade them. So early in the day, we had some trades that worked out up here, but then the day went to hell in a handbasket. Something happened here. Oh, by the way, this is a technical thing too. When you fall this far and you consolidate, and then you lose where that consolidation zone, you fall almost exactly as much. So from here to here, you consolidate, and you lose the consolidation zone, you get this second leg. So technically, there's plenty of money to be done. So the live room is buzzing, questions all day, long-term, short-term question. For example, somebody came in late in the day, said, "Hey, what do you think of Boyle?" I was like, "I don't trade Boyle. Are you looking to go long-term bet?" He goes, "Yes, I'm looking to go long-term." So I pulled up Boyle, and lo and behold, I have comments on it. So why? Because I do this for the gang, but that's another conversation. So I said it's falling into a base, but let's go deeper. I said you have to acknowledge it's just like the S&P. Short-term, it is falling into a channel, right? They're selling rallies, and now just like the S&P does not have a lot of room to fall before triggering another leg lower. So I said in the short term, yes, it is support on the big picture, but short term you might have better entry points. So I said if you do enter now, don't take an all-in scenario. So if you enter, I asked, how do you trade this, via options or via shares? They said via shares. So I said, good. So whatever number of shares you're willing to own in the end, just start with a nibble. So this way you're not all in, you leave some dry powder in case this is not a bottom, you enter more here.
Yeah, there's this guy that I signed up today. His name's Luke. I think he's like a chiropractor, I don't know, something like that. But he was basically looking for these sort of slow poke trades that you call, which, like, you know, you could do these conservative iron condors that you don't have to babysit, that are perfect for people that are like really busy. So that's good for people because the majority of folks here, I'm pretty sure, are just buying calls and puts and doing these other types of trades.
So I shared yesterday, I shared a trade that if you took it today, it would exactly be the same. It was an iron condor slow poke to a degree. It expires on 10/3. And it was the IWM needs to be between here and there. So it's a big range for the IWM. It can rise and can fall. And I checked on it today. It was the same price. So today I said, okay, another group, I said, I'll share an SPY. So yesterday I shared an IWM. Today I shared an SPY. Personally, I prefer the SPX, but I know that a lot of Benzinga users don't have access to the SPX. And I didn't want to write up two different trades. People will be tempted to take both. So the SPY trade also allowed for a big drop and a big rally. And all I need is just the SPY to be between the two ranges.
Yeah, and Michael's asking, do I need a lot of money to start trading options? Nick, there's a trade that you do that's like $400, 25% returns.
That is. So the easiest trade that I like to do every day, like today I made a trade and I messed up. Why? I say I don't like to trade fast because I'm helping 300 people in the live room and hundreds more in the chat room. And today I bought $160 worth of calls that I forgot I had. I had profits and I forgot they were open and they went to zero. So that was my bad. And that was $158 mistake. Bummer. Moving on. So this is the SPX. The SPX is the S&P index. When they say the index, that's it. It's cash settled. You can't buy it. So you can only trade options on it. Robinhood does not have it, but plenty of other platforms offer it. I like it because it's what? Cash settled. So a small account will not get put to stock, will not get assigned. There's no assignment. There's nothing to buy. So you, if you buy a call or buy a put or sell a put spread or sell a call spread or buy a call spread or buy a put spread, and it ends in the money, nobody's going to assign you anything. The risk is known from the get-go. What kind of risk it is? I'll give you the trade today. The trade today was an iron condor to sell a let me move this out of the way. Actually, I'll scratch it up. To sell a call spread, don't worry about what that is, and sell a put spread, and I'll explain to you the math, okay? And I collect 50 cents per contract here, so $50 per contract. And I collect 50 cents per here, $50 per contract. Again, don't look at these levels, they don't apply. I'm just showing you the visual of it. And this would be the open. So as long as the S&P does this all day, I keep $100 per contract. This trade, one contract, will bring me $100 every day. And the maximum I can lose is $400. That's 25% yield on my risk, $400. So as long as I have $400 cash in my account, now I shouldn't trade one trade to blow out my entire account. So if I only have $400, I shouldn't bet it on one trade. But if I had $10,000 in my account or $5,000, this trade will require only $400 worth of margin against it. The word margin in options is not the same as stocks. Margin in stocks is you go to buy $10,000 worth of stock, you only pay $5,000, you borrow the $5,000. That's margin. Here, there's no borrowing. Margin is if you have a $10,000 account and you open this trade I'm talking about here, they will reserve $400 in margin. They will reserve it. So the 10,000 account, they'll say you only have now 9,600 because I'm going to take 400 and you can't use it. It's margin required to cover your worst case scenario because the worst case scenario is $400. There's no assignment. The bell rings, they draw the math, and you win. So that's there's another crazy trade that we do every once in a while. I say crazy because it's low odds. It's called an iron butterfly. Don't get wrapped up in the weeds. I'll just define the actual risk profile of it. I'm risking $50 to make $450. It is low odds, clearly. It pays a lot. And it's low risk, $50 on $450 reward. So today, how do I win? Today I said, with 3 hours to go, I said, I think we're going to close at 36.50. 3 hours to go. So we were still in the middle of the day. I looked at the data. I said 36.50 would be the close. They closed at 36.47.3. So if somebody took my trade, they made $250 out of thin air. They only risked 50. It's pretty incredible to be able to tell the close with 2 to 3 hours to go. Try it. See if you can get it done. We do that often. It's a low risk, low odds of success, high payout. And there's a way to manage it with relative ease. So you know how they say it's a hole in one? It's a rare thing in golf. Well, this is a hole in one in putt-putt, which is doable. You just got to go through the windmill and down the hill and into the cup, which is doable. So these are doable, although they're low odds, but they're high payout and low risk. So they're worth a try every once in a while. They're fun. They're called iron butterflies. So that requires almost no margin, $50, because you can't lose more than $50. That's funny. So think about it, flip. Think about it. The cost to enter into the group. It's a classroom that's open 9 hours a day, plus a side room that's open anytime you want for questions with a chat room, plus trade alerts every day. Although I'm not a trade alert service, I do share my trades every day. Plus on Sunday, I give you another 2.5 hours of my time to give you a free webinar and do your homework for you. If you don't want to research your charts, I'll do it for you. And I'll give you 3 videos for it, 2.5 hours long. These are your tickers. These are my comments on your tickers. This table will be available to you. Usually there are about 150 tickers there. That one was only 120. The one before it was 180, 79. So, and Sunday also, I would give you a 8 to 10 minute video strategy for the week. What I think I want to have done this week, what to look for, what not to look for. Like we have Powell speaking again tomorrow. What the hell does he have to say? There he is. So don't take my word for it. This is today. This is a live shot of my room. And this is the breakout that I called. And I have pictures of before and after the breakouts. You'll see that I drew these arrows before they actually happened. And there's Mary that says she booked 30% on the calls. So there's one breakout that happened. And then I said, there's another one that can happen. And that one before it. So 3 calls back to back to back happened. And this is just one of them I took a snapshot of. And this is where we have how many people here? We had 293 people, sometimes in the middle of the day. You'll be one of them. You can chat with me private. These are private messages. You can chat with me or the rest in open session. Let's see here. Am I having trolls? Because that would be great. Because what would be the day without new trolls in here? Okay. Listen, you can spend thousands learning by losing, or you can join a group that would help you not lose. It's as simple as that. Today, this week, I learned something new from one of the students. I always had a question about Ichimoku. I kind of understood the concept, but I was fuzzy on one aspect of it. And today, go to Twitter and see my tweet where I said, close your puts. And that came out of me learning from one of my students on how to use Ichimoku trailing cloud, whatever you call it, trailing leg, lagging leg, whatever it's called. It was bang on. I tweeted it. I went out and said, close your puts. If somebody would go and find it, that would be awesome. And you can lay it on the chart and it would be right at the bottom of the day before that super spike at the end of the day. Anyway, so Ichimoku, we study whatever disciplines. So I'm good with nothing. Everything you see on my charts is hand-drawn, almost everything. I'm learning harmonics, so I pay for a tool. It's about $1,000 to draw them for me. This way I don't make mistakes. All I have to do is use them. They're bulletproof when you use them properly. Those are the M's and the W's. Other than that, everything you see here is hand-drawn. I do my homework, I find levels, and I draw, for example, check this out, the warning. Hold this or we go into here. Weeks ago. Boom, we're there. So like this one was a trade, a Monday iron condor. It played out. We'll take it out. Sellers lurking. When we get there, there'll be sellers lurking. I keep track of every level, and I'll keep us honest in trying to find significant
Nick,
levels.
For everybody here that maybe doesn't know how to do an iron condor or a butterfly, you have educational videos on what are spreads. Just for everybody, don't feel left behind. Nick has some very essential beginner stuff.
Yeah. So let's say you join today and you don't know much about options. You go in here. What is a put option? What is a call option? Then you move over to here. What is a spread? And what is a credit spread? Love those. Love those. Make money out of somebody else's money. Love those. What does it mean to have a cash settled option? And AM, PM settle? Breakouts, swing trades. What type of trade is best? How to pick it? Anyway. So I do have these and I keep adding to them. So the idea is to join a group that allows you to first and foremost stop the mistakes. I can't tell you how many people get stuck in the wrong trade at the wrong time and they end up making a mistake. For example, they buy calls going into this. In my group, they wouldn't because they are ready. Like, for example, this morning's note. And by the way, yes, I do share a morning note where I do have a chat room here that's going on. They're chatting right now. See, that guy is fake. That's not me. Race Nick. That's not me. I am Racer Nick. Don't follow this guy. So in the morning, I have my morning notes, and my morning note this morning was to not expect the rallies to last. So if you had seen that and the market was up 1.5%, what would you have done? You would have gotten out, and that's what happened. Now they overdid it on the way down. Thank God they came back to flattish, mixed flat going into Powell. But there are some things that are pretty obvious. Look at this one. This one is a head and shoulders. How about we do a quick study? 430 points, 400 something like that. The target of that is here-ish. Some sort of a head and shoulder. This neckline, the technical target can extend to here. The problem with that is that it would cause us to lose this June that we're trying to hold. So this is what I call tag teaming bears. This bearish position pattern triggers this giant bearish pattern. So the 400 points from here turns into 1100 from here. Not a forecast, a potential. But remember, I told you we have the big mess from 2020 the fall of 2020, which starts at 35.50 and it extends to 32.20. Believe me, you can go read experts out there. There are forecasts for 1500 SPY. I tell them if SPX, if that's the case, we have zombies in the street. We have something new that is not in the headline right now. We have something like completely different. There's no way Amazon is going to lose that much sales. I keep using Amazon because it's a big company in order to justify a position at SPX 1500 with the current conditions. There is a way, but not with the current conditions. There has to be some sort of different virus, something. The market, the world is closed again, some sort of a nuclear war. God forbid all of these would happen. Any of these would happen, but there's no mathematical reason for us to go down there. And if we go down there, I will go long so big to commit for a few years.
Nick, so a couple of people are asking like about learning and stuff like that. And I guess the best way that I would call this is like it's live trading, but it's like a la carte education. Like anybody can pop in at any time and ask, hey, Nick, can you explain me a credit put spread? Hey, Nick, can you go over this concept, algo flow, this options contract all the time, right? Just for Sarah, she had a question.
Absolutely. So that's the point of spending time in the live room. I'm not sponsored by Bang. I wish I am. But anyway, the live room, a lot of discussions happen. I told you I learned Ichimoku details from the live room. I knew the basics and nobody could answer that for me. And somebody finally explained that to me. And that was a wake-up call for me. And I used it properly today, like really properly on a 5-minute chart. It was like, what? That can't be that easy. It was great. I know it's busy, but here, that's Ichimoku. It was right there. Boom. I said, close your shorts. And they went sideways and bam, they ran. Well, that's a big loss if you didn't close your shorts at the right time. But anyway. So yes, anybody with a question, like for example, when I wrote up the iron butterfly today, the one that's the hole-in-one, I wrote it up while speaking about it. I described it and I described how you would win. I even described how I would close it. So I would open the trade and I said, once you open the trade, you collect $460 or $450, whatever they end up collecting. And I said, with minutes to go, I would open a closing order of that trade and I make an offer. And in this case, I said, make an offer to close it at 350 or 340. And price is going around 300, the perfect pin. And at some point it gives them the quote, they get filled. And a couple of people got filled and he said, I only made $100 per contract. Well, if he did 10, that's $1,000. There's no shame in that. I don't know how many he did. I never ask. I don't want to know how much they're making. I just want to know that they're succeeding at their own level. So today I encouraged everybody. I said, hey, you guys are sharing. I have a lot of people who share. And it is great to see other people sharing. Hey, Rodrigo, somebody from the starter and enhanced wants to move up. I don't know how they would adjust it. I would love you to move up from those two programs. That's exactly who I want in there. Because you see these write-ups and it's so hard to give you one trade every 2 weeks and have it be bang on. Wouldn't that be great if you're with me every day so we can manage that trade?
Sean Keller. Okay. So pretty much, yeah, Sean, I mean, yeah, you do have the option for the lifetime, but that's till midnight. You have to, the only way to get this deal is by calling the number and emailing rodrigo@benzinga.com. But there's a lot of questions here about the chat room. I really want to get this out of the way so that we can focus on the lesson. It's a great, great material that we're covering here. So big shout out to all you guys for, hanging in there because we have a lot more to cover. So going over these questions, are the sessions on Sundays recorded? Yes, they are recorded and posted in the live room. So all the tickers that you guys said, Nick, like about 150, or so, Does everybody that joined get a free laptop? Yes, good question, Omar. We are doing a laptop giveaway. You don't have to do anything. All you have to do is sign up and you'll automatically, get that laptop from us. It's a new Google Chromebook. Then what is the chat room schedule? It's Monday to Friday, 8:30 till 5-ish, 5:30 Eastern. So pretty
I'm
much
here
the
if
whole
you're
day.
here. I'm here if you're here. I get
The,
yelled at by people that support me in the group. Say, log off. You've worked too hard. Log off. Log off. Log off.
Yeah,
Log
and look, we're still here. Like we're literally here. Like we work 9 to 5 stuff, like so we're still here after that. So I mean, okay, so that's the schedule. And then Sundays, it is from 10:30 a.m. Eastern till about 1 p.m. Eastern. That's the Sunday session that Nick goes over the list. The laptop, yes, Philip. Exactly. And if you don't, and if we, but yeah, any issues like that, keep in mind, email rodrigo@benzinga.com for questions. For all you guys that are asking stuff there. Is there a money back guarantee? Yes, we did hook it up here with a 30-day money back guarantee. So no excuses here. And then last question here that we have. Um, let's see, okay, are you able to teach someone the strategies from A to Z if they're a total beginner, Nick?
Well, can I answer that?
Yes, that's for you.
Okay. So I can't have a class from A to Z, but I will teach you whatever you need to get to the next level. For example, if you come in and say, I don't know anything about options, I'll point you to what you need to do next and get me questions, come back, and I'll take you to the next step from that. I don't hold open classes, but I'll make an example of, who was it? I forgot the guy's name. Somebody was asking, Tom. Tom was asking, can you explain how much margin is required to do an iron condor, right? So I'll answer the question, will we teach from A to Z? In this case, sounds like Tom knows what an iron condor is, and I will spend a few minutes explaining that if you want. Does that work with you? Okay, so the iron condor is fancy, funny word to say I'm long and short at the same time. I want to make money off of somebody who's super bearish, and I want to make money off of somebody who's super bullish. And I don't want to spend a nickel out of my pocket. And that's what an iron condor is. Again, I want to make money off of somebody who's super bearish and somebody who's super bullish. I'm not going to use Wall Street jargon, I promise. So, except for the names. So it's two pieces. The super bullish piece, this is price, is okay. This is not an actual iron condor, so don't go tomorrow and start selling this. This trade is the bullish one. Why? I'm going to say to the super bearish person, hey, you're not going to win if you buy something down here. They'll say, I want to buy something down here because I know price is falling way lower. So I'll say, okay, I'll sell it to you. When I sell them that something, it's called a credit put spread. And I will collect whatever. I'm going to use the 0.5, so $50 per contract. Okay. That is a credit put spread. Now, I'm also going to say to the super bullish person who thinks that we're going to here, I do my homework and I say, you know what? I'll sell you that lottery ticket. I don't think you're going to win. And this is called a credit call spread. I'll collect $50 from them too. So this is $5 wide, the whole spread. Let me see here. I'm going to make a fictitious one, 3715. It is sell the 3715 call. That's the credit call spread. Buy 3720 call, and end up as a credit of $50. Okay, that is the credit call spread. I sell the 3715 call and I buy the 3720 call on the same order, and I collect $50. How do I win? If price goes up but not through and stops here or at here, and then the bell rings. And the credit put spread is the opposite scenario. I'm going to say 35. Okay, sell 3580 put, buy 3575 put, and I collect a credit for $50. We're still just teaching. So now I have a credit of $100. And all I need to win is for price to stay in between these two. And it's $100. So now I'm going to quiz you. So here I collected $50 and this is $500 wide. Okay. So if price goes to here, this goes to $500. Uh-oh, I only collected 50. So I lost 450, right? If price goes to here, same. This goes to $500. Uh-oh, I only collected 50. So I'm going to lose 450. In total, I cannot lose on both sides. Price either goes here and screws me, or goes down there or screws me, or I win, right? So if the worst case scenario happens here, I lose 500, but I collected 100. So the worst case scenario is 400, either way. So the margin required is 400 because I'm collecting 100 to open the trade. Does that make sense? The worst case scenario is 500 either way. If price goes to 0 or a million, I'm going to lose $500. Either or. I can't lose both. Either this wins completely, this loses completely, or this wins completely and this one loses completely, or I win. Either way, the maximum loss is 500 minus what I collected, which is 400. Make sense? Yes. Gary, guess what? The SPX expires every day. What? We make 20 to 25% every day. Sometimes they go bad, but I'm on a good jag. Today I got tested with the 35.30, but I survived. 36, 35. I survived. So end of day expires at end of day. Today's there's one for tomorrow and there's one for the day after and one the day after. There are two on Fridays, like 10/21 on October 21st. There are two SPX contracts. One settles in the morning at the bell, one settles at night at the bell. So two different contracts. So it actually has 6 contracts that week. Okay, other questions? Hit me up. You want to learn? We'll do. This is like, the bell is going, like the market is going. This is what goes on. And then this is what I would say. Let's say this is the market open right now, and this is what I will do. All right, folks, we have a scenario. I think this is a possibility. So here's how you trade it. I would draw this and I would say target. And I would say you can either buy the dip into this or chase the breakout from here. And I would tell them exactly how I would do it. I would say, open an order to buy a call, and if the order shows 50 cents, offer less. So if this dip comes, you get filled on your call, then you're long for the swing up, and then you're long and you capture the win. Or if you're fast, you wait for the breakout and see if you can chase it. That is a live trade. If this market was open, this will be a viable setup. And if you see that, this is the SPX. Let's go to the SPY. You will see them. See them? These white things? Look, I just drew it, right? Look. There's one. There's one down here. There's one down here. And this one was a bearish one. So this is what we do all day. I promise. Clear. How is Fidelity platform for options? I don't know. I have not used it.
Nick, so these iron condors, let's say, you can do them day to day, right? But you can also do them on a weekly basis.
You can do them a week out, a month out, 3 months out, 4 months out. I have iron condors sold throughout the year.
All around.
All around. Say for example, here's how I use SPX for balance, or SPY for that matter. Let's say I have a portfolio full of long positions. I'm long this stock, I'm long that stock, I'm long this, I'm long that. What I would do is I would sell a bearish setup, which is called a credit call spread, bear call spread, whatever you want to call it, out in time, in size. So I would collect thousands. And if we rally, then that protection, that balance may lose me some money. But if we don't rally, I'm making money just waiting. And if we fall, I'm making money just waiting. And somebody's asking how I determine support and resistance. I'm going to answer that in a funny way. What do you think my number one tool is for finding support and resistance? Volume. Good answer, but no. Yeah, Tom, you've been here before. You're a 2. You're a 2. He's a 2. He's seen it. Eyeballs, just look left. So from here, where is support? Not Tom. Where is support? Where is the closest support? This one, right? The most significant support. That's where is the last bounce. Where is resistance? Resistance is the last fail right there. 3659. So you have support, you have resistance from this point, So if we're rallying here, they're going to stall. And if they take it out, it becomes a catalyst. And then they hit this other resistance level. And then this other resistance level. Arguably, this is a resistance. So you look left, and act accordingly. The chat room is 2 pieces. We have the live room, which is this, trades all the time. This one is a chat room where if you don't have time to be in the live room and you just want to ask questions or read my write-ups, they're there 24/7. And I do answer on the weekends as well. So I offer the education. I offer the live opportunity to trade all day, and learn all day, whichever you want to do. You can pop in and out. There's not one jerk amongst the bunch. It is a
quick shout out, Jeremy. Welcome to Jeremy's the newest member here. Everybody, welcome Jeremy to the group.
Hey, Jeremy. So let me see here. The live room seems busy because there's so many people in there, but it's not like a live Discord where it's a madhouse. What do I think about Oxy? Boy, do we make fun of that. How do I get to your live room? Become a member, you'll be in the live room. So quite a few questions pass through. Here's how I would address them. Let's say you're in the live room and you say, hey, what do you think of Oxy? If you're in the live room, then you know what I think of Oxy. I made us so much money shorting Oxy this year. Yes, shorting Oxy. That's not even funny. I know I'm battling the greatest ever, Buffett, but Buffett is not trying to make money off the stock price. Buffett wants the actual cash flow. I tell you one thing about Oxy. I think people don't realize the possibility of it being under $40 this year, or $44 to $42. What? Yes, totally possible. And if it loses these pegs, here's how it could happen. One more bounce, and then it comes to here and it loses this one. It's not me. I'm just drawing what's there. One last bounce, and it's going to come down to here. Let me measure. It didn't happen here. So it's a possibility. It's more so a warning for somebody who's long and is completely blind to it, but this is a potential path. On a bounce, I guarantee you sellers will be here. I'm ready to reshort because I caught this, I caught that. I shorted the XLE very successfully. But when they rally, unless Buffett says I am buying this company for 75 or 80 bucks, the rallies into here are going to be met with technical sellers. Okay. That's Oxy. So what does that mean? If I buy calls here, or if I get long the stock, I should stop out. Okay. Somebody else asked me about the UUP. I lost money trading the UUP. The dollar is, the Dixie would be better. So the US dollar is so strong because Powell is the nastiest of all the central banks. He's the only central bank that is overtly trying to break his people. He said, I want to see destruction in employment. He is on purpose trying to cause you to lose your job. That's his goal. That's his strategy to control inflation, right? How crazy is that? Nobody's complaining about it. Write up a petition, call for his job. That's his strategy. How does he control inflation? By causing unemployment. That's his job right now. That's his goal, which is pretty crazy. So I've shorted the UUP twice and lost money. Next time I try, it'll be in a huge size with tight stops, and I'm done. When the ticker beats me, I'm done. I walk away from it. You can do it. So clearly the dollar is overextended, but until another central banker comes out crazy, Like Powell is king, so the dollar is king. When a country is being austere with its money, it's tightening the money supply, it's propping up its currency. That's what happens. So I think those are the two tickers that scrolled off the page. So hit me with a ticker. This is what happens in the live room. This is what happens. So hit me with a ticker so we can keep the roll going. I know somebody said Tesla. Okay, we'll do Tesla. Did you notice how strong Tesla was today? All day. All day. Yeah. Okay, so I'm going to show you the chart I drew for Tesla ahead of time. I posted it on Twitter too for fun. Every once in a while, I post on Twitter. Where are they? Oh, shoot, it's not here. Hold on, I'll load it. Load layout. Show to. TQQQ, I wouldn't touch it. You shouldn't either. Unless you're trading it, not options on it. Nope, that's SPY. What? Where's Tesla? This should be Tesla. Somebody stole Tesla. Okay, let's go to 15 minutes. There it is. So Tesla on a 15-minute chart yesterday, I drew this where the price was here, and it came inside the bowl, and it did this halfway. Look at where it died. Technicals played out, and then it closed strong. It had an unbelievably strong day, and then fizzled with the market freak out, held a higher low. So if I'm long Tesla, I'm staying long Tesla. If the market is going to recover, Tesla is a big part of it. It is not a heavyweight enough to drag the whole market, but is an influencer. If Tesla's rallying, the S&P catches a bid. It just moves companies like it. The heavyweight today that was also a champion was Apple. Apple was green all day because it's a default. And then Netflix turned around as well. So that was pretty bizarre. Fang Gang were super down. Netflix recovered. The weird thing is I have a problem with seeing the VIX, the fear gauge up, and crap companies like Arcade, Palantir, Roku, and Clover up. Scared markets don't buy crap, the perceived crap. I mean, some of those are good companies, but Hood up 4%. That's perceived crap, right? Small craps, perceived crap. So it's not quality. So they rallied today. So how do you resolve that versus saying, oh, the VIX is so high at 32? It doesn't make sense. PayPal is cheap. Roku is cheap. That doesn't mean they don't get cheaper. Caterpillar, I haven't looked at CAT in a while, so I'll give you CAT. Let's go look at CAT. CAT. What's your time frame on CAT? See how I asked first? What's your time frame? Palantir, I own it. Shares. And I sold puts at 8. Let them assign me. I'll take it. Any time frame on CAT? No? Okay, I'll answer. Short term, it's in the hands of it's in the hands of the bears. So rallies, look for them to be sold. Don't expect rallies will hold until they change this descending pattern. These are not lines. I'm not trying to touch lines here. I'm showing you that rallies are being sold. That's why it's 3 days. Wow. Okay. So rallies into 164, 164 and a half are not reason to buy calls. I would only buy calls above 166, or if it falls into the support, I would buy calls with an immediate stop. So if it falls into 161, I would buy calls with a stop below 160. That would be my strategy. So this is what I call you buy the dip into support or buy the rip above resistance. Unfortunately, I think there are sellers from here on to 166. If you get long now, or if you are already long, make sure to pick a stop out point. A reason to say, okay, I've suffered 20%, I'm done. Loss. Pick a point that gets you out. That's CAT. 1 to 3 days. Palantir, you don't need to even look like the chart. It's cheap. It can get cheaper if the markets fall, but over the long term, I have a small account where I don't trade options much, so I accumulated shares in there. Not all in. I can double, maybe even triple the share count I have, and I would still be okay. SoFi, exactly the same comments. People don't understand what it is. I'm willing to take a flyer on it. However, if you have Palantir and SoFi and Roku, you have the same company, trading-wise. Pick 1, 2 max. Let me see here. You do not like leverage your inverse stocks. No, Rico is asking if I don't like, why don't I like TQQQ? This is where I'm not from Wall Street. Check it out. First of all, I definitely do not like them for spreads. I took one spread one time. It was a credit spread. It was $1 wide. So the maximum I could have lost was $700, and it was showing me down 3,500 mathematically. It was a misquote, and it's not a big deal in my account. But if somebody had a smaller account where margin matters, 3,000 may lock up their account. So it's a mistake. Nevertheless, they can't trade because they're above their margin requirement. So don't do spreads on those. I know people that are successful trading these by buying shares. So what are these? This is like the QQQ NASDAQ on crack. 3, triple leverage the NASDAQ. So if the NASDAQ rallies, so the NASDAQ was plus 0.1 today. This should be, see, it's only plus 0.1. Weird. Anyway, it should be 3 times the result of the NASDAQ. Now, here's my issue with it. Here's my issue. So this is the NASDAQ, right? And I know one of you here is going to be able to explain it and call me stupid, but here's the easy one for me. So this is the pandemic, right? Right here. I'll mark it up. This is the pandemic. This is where we are right now. Look, we're below the pandemic, right? Inside the pandemic bottom. Why? And this tracks what? It tracks the QQQ. This is where we are, and this is the pandemic. How is that possible? Why is the TQs here? The answer I got in my own chat room today, what is it? Decay. What? Decay. Yeah. If I can't explain it, I'm not trading it. That's simple, easy. If you think you can explain it, then by all means trade it. It is a trading thing. You can get in and out, get in and out, get in and out. Don't hold it. I think you're going to get ripped to shreds if you try to hold it for value building. It clearly doesn't hold value. The thing it tracks 3 times as fast is up here, and it's down here. So trading view volume chart is not correct. Tell me how so? Not correct. You mean you don't believe in this volume? Yeah, well, I have Thinkorswim as well. It's not that crucial to me. It's correct enough. What time frame? Well, it depends why. You know why? Because they break it up. So somebody has issues with TradingView, which is the platform. I'm not going to delve deep into it, Leonard, but look at this. Check it out. If I go to 5 minutes, you see these? This is an intraday volume that they have. You can choose to break it up into 3 different pieces: pre, open, and post. So I have a volume profile for the pre, I have a volume profile for the open, and I have another one for the post. That's why it doesn't match Thinkorswim. Thinkorswim doesn't do that. Not the one I follow. Anyway, it's not a big deal. They're all close enough. TLT, sure. So TLT is a representation of the price of bonds. So if you're afraid from Powell because he's raising rates, the fear of rate hikes is means that the TLT falls. Look at it falling. That's what should happen in a mega rate hike cycle, which is what this idiot is doing. So it is falling out of control, and don't try to catch the falling knife. I had a trade this week to catch the falling knife, and I regret it already. I'll have to deal with it soon. So the TLT and the TNX, for example, this is the representation of the price of the bond, the 20-year bond. So if you lend the government money for 20 years, this is the price of the bond. And if you want to think of the other side of the equation is TNX. The TNX is the 10-year yield. So a few weeks ago, actually a couple months ago, I said the TNX has a breakout to 4, maybe even 6.5. And I thought if that happens, the market is correcting. We are. I just can't perceive the scenario where they would let the TNX go to 6. Imagine this. If the TNX is going to 6, I would get out of all XOM, Chevron, AT&T, all of these tricky stocks that pay 3 to 5% in dividends. Why would I want to go in a stock that pays 3 to 5% in the dividend when I have a guaranteed 6% from the government? The government has never defaulted on its debt. So why would I want to risk stock price drops if I can get a free 6% from the government? We're not there yet. We're almost 4 now on the 10-year. We're probably there on the longer term. I don't know. Double check it. Okay. How far do you estimate to enter the trade? David, I don't know if what you're asking. I think you're asking what's the time frames that I trade. I like 3 weeks. I trade daily, intraday, 3 days, a week, but I prefer, for my speed, I don't like to trade fast. I don't like to trade often. I told you I made a mistake trading today because I was trying to trade fast while helping others. 3 weeks is a good number for me. When do I enter an option trade? What do you mean when? Like what time of day? Whenever I see the trade and whenever the level hits the place that it hits. I'm not sure I understand when. Like I don't have, oh, I trade at 7 a.m. When I see it, and when it's valid, not when I see it. By the way, if you don't believe in technicals, check this out. Humans don't do this. Humans are not that accurate. That's all machines. Oh, somebody said, how do I find levels, right? How did I find that level of closing at 36.50 today? It wasn't from this. It wasn't even from a chart. It was from me looking at the options data. I look at the options table and I can tell where price needs to be. And that's how I came up with 36.50. And I was $2.50 off. What time do I set the strikes on the condors? That's a pretty mature question there, Kevin. There are 2 schools of thought there. If I have a gap up open like today, I would throw the credit call spread right away. And I would wait for a dip and I would do the credit put spread. Sometimes when the market opens normally, I can throw the credit call spread and the credit put spread at the same time early because there's going to be the highest implied volatility at the open, like the most time, and then the time starts ticking for that day. Hopefully that answers. How do I feel about buying more than one contract of stock for scalping? How to use the strategy? The amount of contracts depends on the size of your bucket. Can't answer that for you. I don't use level 2 data. Do I ever trade the SPXQ? No, for exactly the same reason I don't trade the TQQQ or the SQQQ. But I'm going to tell you, there are some successful people that make a lot of money, but they trade the actual thing, not options on the thing. So they buy the SQs and the TQs. So study them, try them out. Don't take my word for it. I don't open both trades. Like I don't do the credit call spread and the credit put spread on the same order. It's hard to fill. It's easier to fill them one set at a time. So credit put spread at once, credit call spread at once. Indicators, how many do I use? I don't need any. Currently, I use 2 or 3. I have 12 up there, but there are for me to talk to other people.
And Jack has a question. So basically, it's on-demand education and live trading support.
Absolutely. So if somebody's asking about Shopify, if I own shares, I don't get out. If I have a credit put spread, I don't defend. I've successfully traded it 2 or 3 times for us via credit put spreads. I currently have one. It's under fire. I don't think it's in the money yet, but I personally will take the shares. I would not take the loss in the credit put spread. I will take the shares and sell the protection leg for more profits. Expiration dates can vary. I like 3 weeks. I most definitely will avoid earnings. I love the daily SPX trades, like every day. It's an easy 12 to 25%, 12 to 25% every day. So if I'm willing to risk $4,000 a day, I can make $1,000 a day at the risk of losing some money every once in a while. Is there a guarantee period? Guarantee like money back for you? Sure. A month, right? Isn't it a month?
James, James has been asking a couple of questions. So James, there's a 30-day money back guarantee. So you guys could literally go in there for 30 days, make money. And, once you start trading with Nick, it's just a lot better than doing this alone. Right, Nick?
Yeah. JJ, absolutely. I would sell a bear call spread against the bull put spread. Absolutely. Can we get suggestions? Yeah, that's a good one. Yes. You tell me what pickle you're in. And I can't manage your book for you, but I can help you get out of trouble.
You know, there was this one guy, Nick, and I'm pretty sure it happens all the time, where you get somebody sends you a screenshot. Hey, Nick, I'm trying to do a credit call spread, trying to figure it out on their own, and they send you a screenshot of the trade. Turns out they were doing something completely different, possibly risking their entire account and more, um, because of not knowing what type of trade they were doing, basically.
Yeah, I can definitely help you out. With particular scenarios, like somebody early today, they've come to me before and they sold the position and it was coming under fire and they knew their level of expertise and they wanted to roll out of it early and avoid problems. And Luis, actually, he rolled out of his position and early. So he came to me, he says, we've had this conversation before. I just want to figure it out or something like that. I can't remember exactly, but he posted, okay, my risk was here today at 36.50, which would 36.55. So had he not rolled, he would have lost money, but he rolled early. So now his position, he got paid to get out of trouble for today. Okay, sorry about that. I'm getting bad news here. Anyway, so he needs to, he wanted to get out of it. So he got paid to move his position out into tomorrow at a lower level. So he's in that same position tomorrow, only slightly lower where he was today. So he did the mature thing and avoided being blown out. If he didn't do it, he would have suffered maximum loss today. So good job, Luis. If you're here, I don't think you are, but if you're here, a good job.
Right, Nick. I mean, that's the thing. You help people not just manage the winning trades, but manage, if they have a losing trade, properly manage it, because it's not just making money, it's not losing money over mistakes or things like that.
Yep, definitely. So Gary, if you have access to Benzinga Pro, I have a chat room in there where I post in the morning access to everything I have. So if that's what you're talking about.
Yeah, just send over an email there, Gary. Any questions, if you already have a subscription, send an email. We're putting the contact there in the chat, but make sure you sign up with that link because it does expire at midnight.
Okay, so CCL, somebody's insisting on it. This is a weekly chart. Now, if I'm long this company, I would stay long with a tight stop. It can rally to 16.5 to 17.5. But it has a couple of major levels, 12 plus or minus, 15.5 plus or minus. And this is a weekly chart. Do I have any lines? I do. So let's go to a daily chart. So here's the daily chart. Same company. I just went into one day. And look, same thing I'm saying. Look how tight the bunch is. Tick, 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 tick. Wait, is that earnings? Oh, mama. So it's a coin flip on earnings, but they're going to crush it. No. It's a coin flip on earnings, but they're going to do well. They're going to report this and they're going to report. It's a coin flip on earnings. You want me to prove it to you? You want me to prove it to you? Have you ever had, can you think of the last time Apple delivered a bad earnings report? I can't. They've had one, maybe two positive reactions in the last 8 reports. Why isn't it everyone up if it's about quality? You can say the same things about Google, about Facebook, about Amazon. They're all excellent reports. They're just about the reaction on the night of or the day of is all about feelings. Some people have their perception of one thing or another on earnings, and then the earnings come out and they react with emotions. So it's about expectations. And I don't know how many people have the expectations I have, or what you have, or how many like you or me or him or her. So the reactions to earnings is arbitrary. So if you're asking me, should you buy a long position into earnings? I wouldn't. But if that's your thing and you cross your fingers and you go, let me look at the options, maybe I can get you a clue. Sometimes I can tell you how they're lined up. When are the earnings on it? Does anybody know? This week? There you go. They should do well because, Julia, I promise you, it's not about doing well. I promise you, it's about expectations. I'll give you an example. If people expected disaster and it came out just pure crap, not disaster, they rally. They shouldn't. It's crap, but it's not super crap. So it's all about expectations. Vice versa. I'll give you an example. What do you call that? Shoot. A stock that fell 65%, and they beat sales by 150%, 157%. So yeah, you like that? That's pretty funny, right? So anyway, let me see if I can give you some. I think it's impossible for it to rally this week. That's what I think. If the options positions don't change in the next day or two, there's no way that stock is going to spike comfortably. How about this way? Let me not say that. It's easier to fall than to rally based on the options data that I'm looking at right now. It's easier to fall than to rally in CCL this week based on the options data. Now, the data can change between now and Thursday, but based on what I'm seeing, it's easier to fall than to rally. Oh, I like that, Howard.
Nick,
I like that.
Can you go over a credit call spread?
Yeah.
And
somebody asked, how can I short the market with a credit call spread? So if you think that the market is in trouble and going downhill from now, you can say, I want to make money by collecting money by selling somebody a call spread hope. Like if I think that the market's going to do this for the next 2 weeks, you say, you fool, yes, I'll sell you that call spread, and they will collect money out of my pocket. I pay them, and they are short, but they leave room, and they don't need a drop to win. They just need this not to do that. That's a bear call spread. You sell a call, you buy a call above it. Why do you buy a call above it? When you sell a call, you open risk. You're saying, I'm short the stock right here. And then that's too much responsibility. Your platform would say, whoa, Mr. Moneybags, you do not have enough money to do that. So you go out in the same order, you say, yeah, I know, but I'm buying one right here. So now you limited your upside loss to the maximum width of this minus what you collect. So even if the price does that, the maximum you could lose is this much minus what you collected. So this is a bear call spread, credit call spread. It is a bearish position that does not require a fall to win. So if you fall, you win. If you don't fall, you win. If you rally, you win. If you rally a lot, maybe you'll lose. Only one scenario blows you out is this. That's it. It's a bear call spread. Somebody, Leonardo, that's what we call the secret sauce. I'll put you on the right path. It's the idea that the market is trying to do what? Leonardo is asking, what makes me say that the stock is likely to fall than rally? It's easier to fall than rally. The market is out to screw everybody. So it's going to go where it can kill as many puts and calls for zero. That's the basis of my theory. It's bulletproof. I shouldn't say that. It's a great guide to where market makers will allow price to go. Yes, they can manipulate prices, of course. Don't ask me how, but they can. I'm not from Wall Street. You can call the SEC. Maybe they can explain it to you. Maximum pain theory is a little different. I don't agree with it because the maximum pain theory, the concept is beautiful. That is the concept. But the max pain number gets published based on the open interest, right? That's yesterday's number. What about volume? For example, on the day the SPY expires, like tomorrow is Wednesday, the SPY, there is a contract that expires tomorrow. When we wake up, the house always tries to win. I'll tell you what, Paul, modify that a little bit. So tomorrow when we open, the open interest will be whatever they are. We have so many calls, so many puts. I'll tell you exactly what they are. On the SPY, for example, if I go to tomorrow is the 28th, you can't see what I'm reading. I'm just give you. For example, there is probably 3,000 puts at 372 in the SPY, 3,000 puts. Well, if we wake up with about 3,000 puts, by 40 minutes after the open, we would have 12,000, 20,000. By the end of the day, we will have 200,000, 150,000, 350,000 puts and calls on every level. We will have millions. So the maximum pain theory doesn't account for these. How is that possible? I've yet to see anybody publish a live maximum pain, which is what I do. They'll say, my people will say, build a box, Nick, and I'll build a box and I'll keep shrinking it and shrinking it and shrinking it to build the box. So it is the maximum pain theory, but modified. How does no house always wins? The house doesn't always win. The house wants to win the big bucks and will allow enough people to win to bring other people to continue playing. Like a casino, if everybody lost at the casino, nobody would come back. They let enough people win in order to bring the rest of the people back. Here's how I win. I never put a position that requires the market maker to lose money for me to make money. Simple as that. If you're buying a cheap put or a cheap call, the only way you're going to make money is if the market maker loses money. That is not a way to make a living. You could win here and there, but it's an extraordinary event.
Right. And the thing is also, Nick, that when it comes to risk management, you also help the folks out there with that as well, correct?
Yes, risk management is super important. I insist on a few things that nobody should ever do. Number one, don't ever sell a naked call in a stock. Like, what does that mean? If you want to short a stock and you don't own shares, don't sell a call. That's a naked call. Don't sell the stock short, traditional short. That's not good. But here's something I usually start my presentations with: definition of risk. Think about if you are teaching somebody about risk, how would you word it? I'm going to give you mine. It works really well for options. It will help you put things into perspective. I'll give you a minute. Think about it with yourself. I don't need you to answer. I just want you to think about it. So I'll start by saying risk for me, I bet you all of you have the right answer. One of the right answers is, how much money am I willing to lose? What's the maximum pain? Okay. So puts a heart. Janet, of course, with a heart, how can I not? Just keep on punching. I'll get to it. Never heard of it, by the way. So we'll see what that is. The first part is, how much money can I lose? I bet you all got that one right. What's the maximum pain? Well, that is not the part I manage. That's the decision I make and I move on. I'm willing to lose X dollars and I move on. Number two, that's the part you manage. Can anybody guess what that is? It is the odds of success. It is the odds of success. That's the part I manage. What does that mean? And options, it's easy. That number is called the delta. If you don't know what that is, join the group. I'll teach you. It's off the page. I don't have to guess. If I buy this call, if I sell this put, if I buy this call spread, I know exactly what my odds of success are in theory. So I don't have to make a judgment. Whereas if you buy shares in Apple, you think you're hot and you think you know best. Well, guess what? The person that sold you those shares thinks exactly the opposite as you. They think you're an idiot. You think they're an idiot. That's why there's a conversation. That's why there's a deal. They say, always remember there's the other side of the trade. You think you're getting the best. They think they're getting the best. So when you buy shares, you're making an arbitrary, you're giving yourself an arbitrary number. I think I like my chance. I have a 60% chance, which by the way is a coin flip, which is not how I trade. So with options, I can set my trades to be 85% in my favor all the time. I can choose it. Or 50% in my when I'm buying calls and puts. I can choose it. So that's the part you manage. If you're aware of that fact, then you go back every day and say, okay, is it time to, like today, will you punt this? No, my sold delta is still under control. I don't do anything. So that's risk management risk. I think that's where you're going with that. So somebody is really desperate for me to look at.
Right.
BLDB. I don't know.
And for the people here that are maybe just buying calls and buying puts, I'm telling you, this is a full arsenal upgrade. Learning how to do these things with Nick effectively.
Okay, so that is not a pretty tight. So BLDP, some sort of a power system, fuel system, whatever. Technically, on the daily chart, it's falling into support. Now, I have an issue with its P&L. Okay, it's a new company, maybe not, I don't know. But the sales are shrinking and the expenses are growing based on the annual. Let me see quarterly. Even worse. So this is not something I would invest in. Janet, are you long? If you are long, I wouldn't add. Please don't add risk. Part of the risk management thing, never average down. Never average down. What? Never average down. If you use DCA as a dollars cost average acronym, you are making a mistake every time you use it. Average into a position. I'll give you an example. Palantir, I said I was long, right? I took 20% stake. That means I can double and double and I'll still be okay. 20 to 25%. I'm averaging into a full-size risk position. If I bought 100% of my stake and then the stock got cut and I added another 100%, I just made my problem bigger. Nope. Never average down. I don't know one successful trader that averages down. They average into his full-size position. They scale in, but they don't average down. When they reach maximum size, that's it. They're stuck. They stop out and they're done. Now somebody's dying to see plug. I'm probably going to have the same answer as this one. So with this one, Janet, if you're long it, I wouldn't add. If you're looking to get long, I wouldn't go all in. I would really study the company. I don't know. I don't want to sway you. This is just a top level me look. You know what's also important there is, are they bleeding cash? A little bit. Yes, like 45 million quarterly, 30, 40 million a quarter in negative cash flow from operations. In order to operate, they're generating a negative cash flow. So be careful with that. Do your homework, study the company. All right, plug. I'm not a fan, by the way. So plug that's a messy chart. On a daily basis, it has a big gap here, which is not ideal. But that whole thing is support. When it comes back to here, there's going to be sellers. When it comes back to here, there's going to be sellers. If it breaks through this, it goes to 46. If it breaks through this, huge resistance at 36. Do I have lines? I do. Okay, but let's see, short-term opportunities. The sellers are in charge. The buyers are trying to spike. They do have an opportunity to spike. If this comes down to here and this goes above here, so I would be monitoring this one. If you wanted to get long now, if there's no earnings and you wanted to get long, I would get long and stop out below here or stop out at X% loss. The opportunity is to get to 23.5. And if you can get there, you can even get to 26, 25.80. It is not fired yet. It is not guaranteed, confirmed. It's the word I'm looking for. But first and foremost, make sure there's no earnings. There isn't. That's sweet. So short term, buy the dip with stop as an investment. And you can do options on CMG. You're welcome, Spencer. If you like this, that's what we do all day, every day.
Maybe you can go over energy a little bit. I know you love that sector in particular.
Energy, I've shorted the hell out of energy this year, all successfully. Some via the XOM and Oxy at the same time, and just after I had shorted the USO twice. And the last short was the XLE for the group with a bear call spread that worked, and I immediately renewed one that got under fire and it worked. So I would short the rallies, and I did not reshort the rally, and I should have. Like I was short the XLE here and it fell apart to here, and it, I think 80, I sold the 80 call, and look at it now. Now the XLE has fallen into support. I think people are so confused about energy. I just don't get it. I don't buy the story they're giving me. I don't want to get political. There's no way we have a shortage of energy. What we have is an energy policy problem, not an energy supply problem. We have a demand problem. We are by design destroying demand. What does that mean? All car companies, not one major car company did not commit. They all committed to not using fossil fuels. How much of that is that? 30% of consumption? Transportation, I think, is the giant part of fuel consumption, right? So energy consumption. Where is this demand growth going to be? They're saying, oh, there's going to be fewer people trying to pump for it. Trust me when I tell you, everybody that's in the business of pumping oil, they're going to be pumping oil until they are said it's illegal to pump oil. They're going to be pumping as much as they can. So I don't buy it. So the rally you can't have, we're not even back to spending energy as much as we did before the pandemic, and the prices are at record level. It just doesn't make sense. I said it. The buyers of Oxy at the highs, or Exxon actually would be better example because Exxon does not have a buyout pending. The buyers of Exxon at the top are going to be holding a bag for a long time. And it's a crime that all these experts are telling people to buy, buy, buy. I don't know VET, so I'm not going to go there. The energy XLE, if it spikes again, I would short it down here. I wouldn't short it. It's falling into support. So if you want to take a flyer, it does have support twice over. Now, what if it does this? This is a daily chart. So this is big think, right? So it's not happening tomorrow. If it does this and comes back to here and it loses it, the downside will probably be something like this. So it will go back to here. This is, I think, is a good place for XLE in the end. I think the crude oil should be in the mid to high 50s. That's the sweet spot for Saudi Arabia. Not now, because they're making money hand over fist. They will, because at 55, the Western pump, like shale and all of that, they would not be doing as well as they are. I have a friend that works a crane operator. I spar with him on Saturdays, and I haven't seen him in months. And I don't know, 4 weeks ago, I saw him and I said, "Where have you been?" And he goes, "I was on working with a subsidiary of Oxy." He said, "The P&L has never looked better, but production is down 30%. So it's all hinging on the high price of oil. Isn't the government trying to break oil? Isn't that the problem with inflation? The biggest problem, a big problem with inflation. So everybody is trying to kill oil, and everybody wants to buy oil companies. That's the worst kind. So be careful." Naked options example on spreads. So naked options, what does that mean to do naked options? If I want to short a stock, I can simply buy something called a put option. It would cost me a couple $100, $50, $300, depends on the ticker. But it's a finite amount of money. And if I get it right and the stock falls fast, I make a lot of money fast. If it doesn't, that's the maximum I could lose, my $50 or my $100. That's a responsible way of shorting a stock. If I wanted to short something with more money, and I would prefer not to do it with naked options, meaning I don't just buy a put. It's a lot of money out of pocket. If I'm trying to do 10, it's like suddenly $50 is $500 or $5,000. So I would do what's called a put spread. I would buy something, but I would sell something below it that brings me money. So the out-of-pocket expense shrinks, but so will the opportunity. So instead of making a triple or quadruple, I can maybe make 50% or maybe even double my money, which is a pretty good balance in my opinion. So if I'm a slower trader, I would use spreads to buy. If I'm a fast trader, I would get in and out with single naked options. If I'm selling a put spread, I'm being a bullish by leaving room for error. If I'm selling a call spread, I'm being bearish but with leaving room for error. Selling a put naked is what I like to do, but not in this environment. For example, if somebody said, "Hey, would you like to buy Tesla at 200? Can you sell me insurance?" I'll say, "Yeah." So what I would do is I would promise this person somewhere out there in the world that I will buy their shares at 200 into November. And for that, they'll pay me hundreds of dollars now. Sounds like a good deal to me. He loves his shares. He just wants protection at 200 or lower. I love his shares. I want to buy them at 200 or lower. So it's a win-win scenario. We're both bullish Tesla at different levels. So he pays me, I collect the money. What if he doesn't give me his shares? I made money out of thin air. I didn't even need to own Tesla. That is selling a put. Don't go out selling naked puts unless you know what you're doing. All right, friend, I'm running out of energy here. Have we put in the time? Oh yeah, an hour and a half.
Yeah, so we've been here for about an hour and a half, folks. So I mean, this has been a pretty good session. You know, we've had a lot of fun, and we've gone over a lot of topics. Like, you cannot say that we haven't gone, over like a bunch of stuff here. And this is just a little sneak peek of what's really happening in the chat room, like the whole day, Monday to Friday, 9 to 5. So, but yeah, we're still gonna stick around here. We're still gonna be here. I know that some of you guys have questions on like joining. Just make sure to look at the chat. That's where we're posting the link. It expires at midnight, but we're still gonna have here Nick for a couple more minutes, right? We're still gonna have Nick.
Yeah. Let's do a couple of tickers. I just did VET for you. Whoever asked for VET. Anyway, I think somebody's asking for Vermilion Energy. Okay, so that's the answer. Same exact answer as this one. It does have support. It may bounce off support. It will find sellers up here. And if it loses said support, support will become resistance and the target will be somewhere around 12. That should make a potentially good entry point. Why? This was a breakout that they never retested. Oh, AMD, same story. Same story. AMD. Earlier, somebody asked for AMD. So it's important. AMD is not for me. I've said that for weeks and weeks and weeks. And NVIDIA, watch this. Why? Because they are in the hands of the bears inside of a massive head and shoulders and now triggering another even massiver head and shoulders. I said I will have the opportunity to buy AMD in the 60s this year when it was up here. I was called an idiot. I said, okay, look at this head and shoulders right here. As long as it's below 108, because it had that spike to 108, that is the target. However this long is, however this is. And why? Pandemic, base, another base. They built this. It was absolute garbage. There are holes in here. There are gaps over gaps. So if it comes down to I tell you what, during the pandemic crash, wherever the pandemic, was this the pandemic? Yeah, that's the pandemic. This was the pandemic. Inside here, I sold $20 puts in AMD and they paid me $2,200, 2 batches. Somebody said, please buy AMD at 20 from me. I said, sold. I'll take your shares at 20. So I would have broken even at 18-ish. I did that twice. Once I would have broken even at 18, actually a little bit lower, 19.8. And the second time was slightly under 18 because people panic and I take advantage of it. Now, as long as they're below this, rallies will be sold inside this descending channel. NVIDIA, exactly the same thing. So I'm not saying it cannot rally and recover. I'm saying that if AMD is rallying, most likely the SPY is rallying. So I don't want to take the junk that AMD has. What kind of junk? Supply-demand issue. Supply from the fact that you cannot get stuff, and demand, I hear that the government is selling it not to sell, blah, 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 blah. So why would I want to take those extra junks on top of my risk? Now, I'm going to show you something that's going to scare the matictics out of you, which is actually bullish. This scenario is $100 less, which makes AMD negative, right? If this head and shoulders plays out, that brings AMD to like minus 30, which clearly is not likely to happen. Therefore, I think the bottom in AMD is somewhere in here between 62 and 52. If it ever gets down there, I would catch this falling knife finally. I like the company. I like the reputation. I hate the product. This is my first AMD machine and my last. Actually, I bought a desktop, which was the Ryzen 9, whatever, it's 59 or whatever, 89, whatever, the best Ryzen, and a Ryzen 7 in my laptop. I hate both. They are like Apple product. They are controlling. You can't touch anything. And I'm pretty astute with technology. And I've had Intel my entire life. I'm going back to Intel. I fell for the 8 cores. Intel's faster per core, and most applications run my applications. I'm not mining for anything, so my applications don't need the multi-core. Anyway, it was a mistake, but the company's great. The financials are great. It's relatively cheap, much cheaper than NVIDIA, much more expensive than Intel, but I wouldn't mind grabbing some AMD longs. How? I don't know. When? I don't know. I'm watching. Somebody asked for Intel. Intel is a buy it and forget it for like 5 years. Did you know that Intel is the big beast among them? Last I checked, which was about 3 months ago, Intel was bigger than both of them put together twice. So it doesn't get any respect. It is the beast that they're all chasing. It is the dominant player that they're all chasing. Maybe ARM comes in there if you talk about ARM as the mobile, right? Anyway, so
yeah, and after this one, let's do Pan for the brother Andrew here.
Pan, P-A-N.
By the way, I do need to give a proper shout out here. We have a new family member, PMJWSUDS11. Big shout out. I don't know what your name is, man. PJ, we're gonna call you PJ in the chat. Big
DJ.
shout out, folks. Everybody, welcome him. Let's go. Come on.
What is this? I don't have the right. This is delay. That's not the right one. PAN. Oh, Palo Alto Networks.
No, Pan Gaming. PENN.
Pen. Okay. I like Pen. It's kind of like DraftKings, only with actual fundamentals. Like, it's actually running a profitable business right now. It has no respect. So if I'm long shares, I would hold on to them. If I wouldn't add to anything. Don't average down. I wouldn't add to anything. If I'm looking to get long, I can nibble, but it will follow markets. And look, it's losing its support. And the next support is not until $20. You can see it. It's inside the pandemic. This is where the world was closed. That is just nuts. Facebook is down here too. That is nuts. The world was completely shut down and they were doing better than now. That is just nuts. I don't get it. Nevertheless, don't fight the tape. That's what's going on. If I'm long, I don't add. I think it will eventually have a good rally, but it needs the market to stabilize. So fundamentals are okay. It's a tough business. Better than DraftKings, which are similar, but DraftKings probably moves faster. But
yeah, I know somebody that.
Look at the
really
P&L
bullish
of
on
DraftKings. You see that? Everything orange is losses, and those are sales, tiny, right? If we go to Penn, sales are 1.8 billion. There's no orange. The orange is profits above the line. Yeah, not the same company. Yet they trade the same way.
Nick, and someone is asking if you also kind of help them buying stocks, which I don't know if we mentioned it, but you also have a portfolio for.
Yeah,
stocks.
I had somebody today. I asked people to, I coaxed people to post their trades, and suddenly I had like 15 people fess up about their trades. One of them was trading thousands of stocks intraday. I had no idea. He said, I'm long to 10,000 shares of this, 3,000 shares of that, 500 shares of this, and I'll exit all of these by the end of the day. I was like, what? I had no idea that he was trading stocks. Never said a word about it. But he benefits from all the levels that we call, and he says, is this good? Is that good? He sees a breakout. He buys a whole bunch of shares. He doesn't deal with options. Absolutely. I have a lot of people that do futures. So they're trading the ES, which is also not doing options. I have people that do options on the futures, which, if you didn't know, options on the futures do exist, and they're not, I believe, they're not constrained by PDT rules.
Nick, do you know people that use futures to hedge their trades, like their regular trades?
Overnight, but no.
Because you do chart them, and the thing is, a lot of people can trade stocks out of this because it is a very technical, like there's a lot of technicals that you're
if you're trading the
hardcore.
futures and you don't know charts, your competitions do, you're going to lose. I guarantee it. I guarantee it. I have friends that are futures traders for decades, and they make 7 figures, and you're not going to beat them. I guarantee it. And they do know charts inside and out. That's all they do. They don't listen to news. Do yourself a favor. Don't listen to news. Listen to news for your own safety. Like, if you're in Florida, by the way, all the Florida constituents, if you still have power, good luck to you there with all the hurricanes and storms that you guys are getting. We have a lot of people from Florida in the room, and we were talking about, I was actually chatting with someone that said, oh, I just lost power. Another person said the internet's slow. A couple of people said that. So they still were there. So clearly we have something good to offer. Here's the bottom line. And I'm going to say this and then get out of here. I guarantee you will be a better trader in our group. I guarantee it. I don't care if you learn from me or not. I know you will become a better trader version of yourself. I guarantee it. And if in a month you don't believe that, get your money back. And do me a favor, don't cancel in 1 or 2 weeks. Take the month, take 25 days, because it takes a while to get into the rhythm. You're going to get in there and you're going to say, oh, well, I don't know what that is. I don't know what that is. Don't let it bog you down. If you don't know what that is, ask, and I'll tell you how to handle it. I'll offer you a solution. We'll get over the hump. You hear something else, and I'll explain it to you, and we'll get over the hump. You'll get frustrated, but don't quit. And by the end of 2 weeks, you will have it down. It's repetitive. It's repetitive. And you will hear iron butterflies. What the iron butterfly? I don't even know what a call is. What is he talking about? Don't let it bog you down. We'll get you there. So I guarantee it that you will be a better trader in concept. You will learn new things. I did today. I swear to you, I learned something new today. I learned it actually on Saturday, and then I applied it today, and I went on Twitter and I posted. That's how confident I was from the teaching of one of my students. He goes by Solus, and I posted it on Twitter, and it was bang on the time to buy a call or close a short today for SPY. And so if I can learn something new, you can too. All right, that's my mic
Yeah.
drop.
And I mean, Heather saying saved me from adding on BX last week. Thank you. Sebastian, Nick offers I mean, yes, coaching, trading, coaching, education. If even if you're just bored, want to hang out, you can just, hang out there if you're looking for a friend. Howard says, as a member, second year, big shout out. We've been doing this chat
Whoa,
room
what
for
are you
quite
doing
some
here,
time.
Howard? Go relax. I appreciate you, but go relax.
He says Nick is one of the, I mean, you can see the folks just, they like hanging out with Nick.
Listen, how good is Nick? Good. It's good enough to have a copycat out there trying to steal his clients. I mean, what is happening out there? Somebody's out there reaching out as if it was me and soliciting business.
Grab a beer says that he loves you. He or she, I don't know. So let's see. So Howard basically says you're one of the best. Appreciate how direct and down to earth Nick is. Nick is probably the most down. He's probably underground. But yeah, he doesn't sugarcoat any of the stuff. And really, you don't want
I get in trouble for that. I get in trouble for that.
That's all right, man. But like, for example, let's say if you go to CNBC, they're sugarcoating everything. They're just pumping. And you really need to get somebody that gives it to you straight. It's your money, right? You don't want somebody has, ultimately the goal of the chat room is for you to be a successful trader. If you're, looking at these other sources out there, that's really not the goal. They're people, they're journalists, they're reading from a teleprompter. All the stuff is natural on the fly as we go. And Nick is there 9 to 5 the whole day. That's crazy.
I'm there because I care about my people. And, I don't have a hidden agenda. I mean, clearly I'm making money off of your memberships because it's what we do. And there's at least 9 hours, maybe 9.5 hours every day, my commitment to you. So, all right, I'm going to bug out of here and find out how I can stop this guy from, poaching my people and harassing them. I don't know what kind of things he's.
Right. Yeah. Good luck with that, man. And I'm going to stick around here. I'm going to go over the chat room, the education videos for all the people that did sign up. Yes. And I'll show you guys.
Jay. Jay sounds like a cool person. Come on in.
Janet, you got to come in.
Janet, come on with all the hearts. Let's go.
You need to get in here and you get your air horn. All right. You get your official air horn.
كريم تحكي عربي؟ عنا كتير بيحكوا عربي. يلا تعال. I promise you, we've got French speakers, Arabic speakers, we've got Koreans, we've got Singapore, we've got Turkey, we've got Russians, we have, let's see, Australians, Germans, we have Australians in Germany and Germans in Australia. It's Italians, we have Argentina, I guarantee it. Come on.
Bunch of Canadians. I signed up people from Japan, Ukraine,
Swedes.
and it's crazy because you hear when I talked to this guy from Ukraine, he was basically saying that gas is 10 times more expensive there. It's just interesting having, an international community there.
All right. Later.
All right. We'll see Nick in the chat room, folks. And now really quick. All right, man. And I'm going to show you some of the videos. 1 second. All right, I'm going to show you guys some of the videos from Nick, basically, and where you can find the live session, because a lot of you guys just signed up, and I want you guys to know where to go and how to access this stuff. So for the people that did sign up, you're going to get an email to fill out the form, and that's where you put your address so that we can ship you the laptop. There's a 30-day money-back guarantee. There's literally no excuse to not try this. I'm going to show you a couple of videos here. Okay, we got Habibi in the house. What's up, KH? You've been here for a while. There's a lot of people that have been watching these sessions for years, and Nick is amazing. He does a lot to help the people here. So as soon as you sign up, fill out the form. The other thing is that make sure you get into the live room get into the live room, this is where you're going to find everything, right? So the live session, the Monday to Friday, 9 to 5, where Nick is sharing his screen, webinar style, is right here. It says live session, but again, very important to go here and notice there are 2 channels. And the inner circle chat, let's click on there. You're going to see that everybody there is posting. It is the community. We have, I think about like on the live session, I've seen like 350 people live. So it's getting, it's growing. I remember when we started this with Nick, just me and him, and now it's a great community, beautiful people there working really hard, grinding down the charts, trading options, helping each other. It's a great community, right? And everybody there is a real trader. These are not fake accounts like StockTwits or Reddit, none of that stuff. These are actual verified human being traders. And I know a lot of them. We got Doc in the house. He's a great individual. He's been there in the chat room for a while. He helps a lot of the new traders. We have a lot of members that do take on that responsibility, that role out. I mean, really out of their own way, because ultimately this is a great environment. We want to keep it a great environment. This is our workplace. Yes, it's a subscription. You go there, you're live with the community with other traders, but the reality is that this is a workplace. People come here to make income, right? We have a ton of day traders, ton of people that literally do this for a living. So it is a workplace, and we have fun. We enjoy it. We chop the markets down. And if anybody has questions, as soon as you sign up, just ask for Doc in the chat room. He's gonna ask. He's basically gonna give you a walkthrough as well. All right, no, just kidding. But Doc, yeah, there's a lot of great users out there. I cannot talk about this chat room without talking about the great community that we have there. Jay says, being a math numbers genius. I'm shocked I haven't learned this already. Yeah, there's a lot of stuff. And this was just a very short time that we have, because keep in mind, we have to sleep, we have to eat. But like Nick is there the whole day, Monday to Friday, 9 to 5. And no, he was here with us till about recently. So we put in the hours, we put in, our side, right? We do everything that we can to give you the resources, the tools, the technology, all that stuff. In-person meets, Jay, we did a thing in Vegas that we brought in a bunch of people. People paid their ticket. We were at the Araya Hotel. It's a very nice hotel, 5-star spot, really nice. A lot of the members were there. Born to Be Free, Steven. There's ton of like members that were there. So here and there, we'll do these conferences for the members of the inner circle, because people do eventually, they love meeting Nick, hanging out with him and stuff. And, we have a session, and you guys will know the next time we do an event. But yeah, pretty much we meet in the chat room. So back to the chat room, right? I got sidetracked there. You'll see 2 channels. The first channel is the inner circle chat. That's where everybody's posting, the community, everybody, literally, including Nick. And then you have Nick's important messages. That's where Nick is posting. Only Nick can post. So that means that you're going to find his trades, his setups, and also the link for the live session. All of the indexes charted out: SPYs, Qs, IWM, futures. There's a lot of futures traders as well. This is the options inner circle chat room, Raul. Yes. Okay. All right. So we went over that. Make sure you go. This is posted very early in the morning, like 8:30 a.m. And that's when everything gets started. You can see that there is a pretty large market commentary here as well from Nick. And Tesla today, let's see what's going on. So he pretty much charts these out, and he'll be putting these recommendations. Myself, and I know a lot of other traders at this point, being with Nick and just knowing how he thinks and operates, you can usually set up a trade just by looking at this chart, because you already know what he's looking at. You have his notes, you have the levels that he's pretty much telling you to look for. So you can set up a trade 100% just by looking at this chart, without even having to ask Nick. Obviously, you have access to him. You can talk to him, which is a huge benefit, a huge plus, right? But Raul, I would check this one out, dude. I would definitely join Nick, because you get a lot more time. You get the whole day. I don't know there's nobody else that is teaching any course anywhere that I know that gives you 9 to 5 the whole day and Sundays. And it's just, it's a lot, and people appreciate it. You can see the people in the chat, the members love it. I love it. It's a great community and environment. Um, okay, so that's let's see. All right, so that's the chart that he put out there. So that's basically, very easy, simple to use. It's not, we're not overcomplicating anything here. This is basically, um, you know, well, that's 8:30 a.m. Eastern. Yeah, so I guess, oops, like 4 a.m. Jay. Nick is in California. Okay. So, all right. So those are the two channels. Make sure that you're in the Nick's important messages and you go to this link. This is the most important link, really, the live session, so that you have immediate access to Nick the whole day. If you're in a bad trade, in a pickle, I mean, this is really when you have to just appreciate what you have, because then you'll only appreciate it when, like, when you're in a desperate situation. Like, there's people that maybe get into the chat room, and let's say they did like some really risky trade on their own, and they're underwater now, and then they get into the chat room and they're asking Nick for help. Like, it happens, like I see it, and really, if you just stick in the chat room and you do the consistent trades with Nick, you're going to be much better off than just trying to gamble money away, because Nick trades in a very strategic way. As you can see, the iron condors, butterflies. If you don't understand it, it's fine. You're going to understand it. It's not, you don't need to be a rocket scientist. You just need to sit down with an instructor and be part of a community, like a school, whatever you want to call it, and you're going to get it. You're going to get it. If obviously you have to want to get it, like we're doing everything here for you. But ultimately, if you don't want to learn, if you don't really want it, then, there's not much we can do for that. But if you want it, if you're really serious about trading and making money, you have more than enough resources here, hands down. Like, you have the whole day with somebody. There's just really not much more you can ask from a person at that point. And Sundays, so that's a lot of time. Imagine all those hours that you're putting into your education, into your trading. It's just, I mean, within the 30-day money back guarantee, let's say you get your money back, you're still going to have learned a lot of stuff in those 30 days. Just count the hours, like 9 hours a day, 8 hours a day. It's like 40 hours a week plus Sundays. I mean, you're getting a ton of attention, right? A ton of attention. Andrew, I'm going to get to your email, brother. And if anybody else does want a lifetime, just know, send me an email. I'll hook you up, one-time exception, until midnight, unless you send an email, and I can, there's some circumstances. But okay, a couple of questions here. I'm going to post something here in the chat really quick. You guys have been asking about. Yes, everybody will get a laptop if you join, right? So you join the room, and you will get a laptop shipped out, but make sure that you actually fill out the form. Okay. Now let me show you a couple videos here. These are critical. These are beginner friendly, beginner necessary. You need to go through these videos if you're starting or learning options, or if you really feel that you need a little bit of just tying down the loose ends, right? Let me show you why. Number one, right? What are options? What are puts? You really need to know actual definitions. Not, like hearing it from somebody like Nick, right? A professional trader, not some YouTube, a stock guru or nothing like that. No marketer. So, all right, video below. What is a spread? You need to know what's a spread. It's very important. We do credit call spreads, credit put spreads. You really need to know what a spread is. You don't have to be buying calls and puts like for trading options. There are more conservative ways to trade options without you having to lose 100% of the trade. So if you want to do that, it's much better than buying and holding a stock. You get more than like, than trying to trade. Like with the iron condors, if you're pulling like a 20-25% on those trades. I mean, how consistently can you get 25%, 2-3 days out of the week, as an example, right? and really with a much wider bet. Like the way I look at it, if you guys have ever like gone to the casino and played roulette, you know, let's say if you go to roulette, you put all your money in like one number, it pays big, but it's only one number, right? But if let's say you put it on red and black, then your bet's a little bit more wider, right? Right. So that's kind of like the concept. That's like I can kind of try to explain it. But basically that's what it means, right? That you when you do an iron condor, it's less volatile than just buying a call, buying a put. So call options, very important to actually go through these videos, guys. I did it. It helped me a lot. Again, if you're new in trading options, you have to, like, we're going to start locking your access until you actually watch all these videos, because I really think it's so important that you watch these videos. It's going to help you. If you're new, it's going to help you understand the conversation around you, and more importantly, participate in the conversation so that you're able to learn, engage as well. That's real learning, right? So credit put spreads, this is the money maker. This is the bread and butter here. So I would make sure to look at this video. It's a 17-minute video. Then here we're going into the risk management side of things, when to book or set a stop loss, managing your losses, and when and how to book profits, managing your wins, right? Because you do want to be able to maximize your gains and minimize your losses, because you will have losses. We're not here telling you that every trade is going to hit a home run or nothing like that. If somebody tells you that, they're lying, obviously. So if you have a loss, you need to properly manage it. And this video is great for that, especially for options traders. The other thing Nick was talking about is the SPX versus the SPY. Amazing video. You have to watch it, especially if you're doing spreads, especially if you want to try the iron condors that we were talking about with Nick. You got to look at this video. Then what type of trade is best? Credit put spread, credit call spread, buying, selling calls or puts. There's a ton of things out there: butterflies, diagonals, short butterflies, condors, all that stuff. Very important to know what it is, and all the different trades, types of trades, right? Which one's the best for that particular scenario. And then how to pick what type of trade, right? So this is what type of trade, right? This is how to pick what type of trade. So very important, folks. I really think you guys should go through these videos. Everybody that joins the chat room obviously gets access to that. So those are educational videos. But remember, you have Nick live the whole day, Monday to Friday, right here on this link. So you can ask him any question about credit put spreads. You can watch the videos and basically write down your questions, and then go to the room and then ask him about those specific questions that you have about those videos. If you really want to learn, like, you have to treat it as such, right? And that's going to kind of help you get you know, a little bit ahead, right? One day at a time. One day at a time. We've been helping retail traders do it. Don't think it's impossible. You can do it. You just need a little bit of guidance, a community, and an instructor, right? A great instructor with the right tools, technology. That's really what we brought here, right, to this chat room. It's our most popular chat room for a reason. People love it. There's a lot of value in it. If you don't see value in it, then I don't know what you'll see value in, honestly. So I will leave the contact. If anybody does have any questions there on how to join the chat room, if you want a lifetime, make sure to send an email like Andrew did. And the contact will be in the chat, folks. I want to thank all you guys for being here. Make sure that you stay safe out there. Everybody, if you're in Florida, you know, stay safe from the hurricane and all that stuff. Thanks for being here, folks. We'll see you next time. And more importantly, we'll see you in the chat room. We'll see you guys in the chat room. Have a great day, folks.